My name is Liesel Bodram. I'm the head of advice for personal finance at Old Mutual. We listened to the budget speech today and we finally now have certainty around what is happening with our VAT rate. After 3 weeks of speculation, we are going to see an increase of 0.5% or half a percentage point in May this year, and then another half a percent in April 2026. So this is where the minister has landed with a VAT proposal. I'm here with Johan Els today, the economist at Old Mutual, and we would love to hear from you, Johan, what you think this VAT proposal means. What must the consumer think? What can the consumer expect, given what we've heard from the minister today?
So yes, it's far lower than what the initial proposal of 2% was. So obviously, we knew that we had to pay higher taxes. This was less than what was proposed previously. And in terms of the impact on consumption, I think very marginal. Half a percent point this year will have a very limited impact. Also a limited impact in terms of inflation. And I think that's important to take into account. Of course, the other side of the same coin is that we will have to pay somewhat higher individual income taxes because the tax brackets have now not been adjusted for inflation. The overall impact is, of course, less money out of our pockets this year compared to what was initially proposed in February.
Absolutely. So the 2% to a half a percent VAT increase is definitely much more palatable. But as you say, coupled with for the second year in a row, we're going to see bracket creep for income tax because there's no adjustment to the income tax brackets, the medical tax credits, or the rebates for income taxpayers. So if we look at all of this together, there's going to be a higher burden on the income taxpayer and the consumer from a VAT perspective. If we take a step back and we look at the impact on the South African consumer, what other economic factors would we need to take into account to really understand how this is going to impact the consumer on a day-to-day basis for the rest of the year?
Yeah, I always believe we should take that bigger picture into account. So that's hugely important. Firstly, from the budget perspective, there was no increase in the fuel levy, which could have happened given the fact that the VAT rate increase is lower. That helps. Just in the very short term, it looks like we'll have a 1 rand a litre drop in the petrol price at the start of April. So none of that will be taken away by a fuel levy increase. The overall consumer conditions are far better this year than at any time in the previous few years, given much lower inflation, given interest rate cuts, and the prospects for more petrol price cuts after this April cut, the prospects for continued low inflation, and the prospects for further interest rate decreases down the line. So the rand has performed much more stable as well, given global turmoil. The rand has actually outperformed other currencies. That supports further petrol price cuts. So the overall consumer conditions will be somewhat better than over the previous years. And in fact, the tax rate increase this year will not destroy that better consumer outlook.
Okay. That's good news, Johan. So even though we're seeing some extra taxes now, we are seeing hopefully some economic relief in the budgetary pressure for the rest of the year for consumers. The other thing that was noted in the budget that was really interesting was the collection of revenue resulting from two-pot withdrawals. We saw the government expected revenue of 5 billion from two-pot withdrawals, actually collecting 11.6 billion. What does this mean for the average pension fund or retirement fund member that have now withdrawn and paid the tax? Can we see similar results going forward? Do we expect people to continue withdrawing? Is it a good idea to do so? What is your view?
Absolutely not a good idea. And we've been warning about that for some time. And consumers now saw that they actually pay a big portion of that withdrawal from the pension fund into taxes. So we complain about value-added tax or no bracket relief for income taxes, but we pay a big portion of our pension fund money in terms of taxes. So not a good idea. I think to some extent it will continue, but I'm hoping that better consumer conditions this year, and again, lower petrol prices, continued low inflation, lower interest rates, that will support consumers enough so that they don't dig into their pension retirement monies, because we shouldn't.
Okay, absolutely agree with that, Johan. Thank you. I think it's an extra voluntary tax which no one should want to pay if you can manage your behavior appropriately and not withdraw any of the retirement fund monies in future tax years. That would be great. And then lastly, in closing, we also saw an adjustment to the transfer duty brackets. Do you want to comment on that for us, please?
No, that was actually a surprising adjustment because we've recently had one, I think 2 years ago, and it's a bigger than inflation adjustment. So that's probably good news for the property market as well. Somebody who wants to get into the property market or adjust his holdings of property. So I think there's a little bit of a bright spot on that side as well.
Great. Thank you very much, Johan. There you have it. More income tax, but don't lose sight of the bigger economic picture, which hopefully will bring some relief for consumers during the rest of this year. Thank you.